We've got Dan Fineman, who is the co-head of Equity Strategy Asia Pacific at Credit Suisse, joining in. Dan, thanks so much for taking time out. We're looking at these rescues, time and again, shoring up the banking system, and the latest, of course, being First Republic. Given that we have seen these steps being taken, it certainly is instilling a sense of confidence among investors across the globe that the contagion effect is not going to be that harmful.
We've seen this movie before. The regulators have learned a lot since the global financial crisis in 2008. Back in March 2020, we had financial markets in the US come under a lot of pressure. The regulators stepped in very quickly, provided a lot of liquidity, and the problem disappeared quite quickly. We're seeing a replay of that. The regulators know now that you need to act quickly, that you need to bring the big bazooka out before the problem gets serious. And I think that they're going to have this under control.
Dan, I'm curious to understand the views on India and your Asian Investment Conference, which is going to take place soon. The themes that you've actually picked up for the longer run, and they're quite intriguing. Let's pick up the first. Winners of a weak dollar. Who do you think fits best in that category?
Well, if we look at it from a stock market perspective, the markets that are more export-oriented tend to do better because a weak dollar is actually good for global trade. So the likes of Singapore, Malaysia, Taiwan tend to outperform in an environment of a weak dollar. If you're looking at sectors, it tends to be, again, the sort of globally oriented sectors like energy, like materials, and commodities.
Do you think in terms of a confidence crisis which global markets were suffering with, especially after the SVP debacle, that confidence has come back? Because let's say 24 hours ago, 48 hours ago, the fear in the system was that what if there is a contagion? What if regulators do not step in? What if there is another run on bank? Do you think a lot of these what if questions are addressed now?
I think that we will move past this fairly quickly. A key reason is that the problems with the banking sector in the US right now aren't about credit quality. It's largely a liquidity issue, and it's very easy or relatively easy for central banks to deal with liquidity issues. It's much harder to deal with solvency and NPLs. That requires more of an effort from the government, and that usually is lagging. So I think in this case, we're helped that the problem isn't that serious.
Dan, can't help but, be peeled towards some of the stock names as well that have been flagged off in the report. Falling income inequality, some stocks from India, Asian Paints, Indigo, Apollo Hospitals, and Zomato. Walk us through the rationale for picking out a Zomato at a time like this.
Well, in general, we're looking for stocks that would be exposed to a rising middle class. The theme that you mentioned is that we've been seeing falling income inequality in Asia over the past decade, I should say emerging market Asia, India included. And that means that you get supercharged growth in the middle class. And the middle class, what do? They spend. So we like consumer discretionary as a theme.
All right. Thank you so much, Dan, for taking time out and giving us a perspective of the news across the globe, as well as your latest report, and all the very best for the upcoming conference.